To cope with the economic fallout from the coronavirus pandemic, the federal government solution has been simple. Spend, spend, spend. And the federal government has stepped in to provide relief with a historic stimulus package that provided one-time payments to individuals, loans to businesses, but it's pushed the federal deficit over $3 trillion plus. And then Janet Yellen has another $1 trillion that she's going to be spending from the TGA account. And we also have a future infrastructure bill that's coming that's in the neighborhood of $3 to $4 trillion. Okay, but should I worry? Should you worry? Well, let's put this in perspective. The U.S. pre-COVID had a deficit of $984 billion in 2019, roughly 4.6% of the gross domestic product. Now the federal deficit is somewhere around 18% of GDP, almost double what it was in the peak of the Great Recession. You likely won't see the effects of a high federal debt for some time. However, debt can typically hinder private markets and investments and contribute to inflation. Inflation is the key word here we want to focus on. While it's not an immediate concern for you now, it could be an issue in the next few years. The Federal Reserve is going to step in and try to combat inflation by adjusting its inflation rate targets above the 2% range, and forthcoming economic conditions might kind of change some of those numbers. But I wouldn't be surprised if you see some sort of yield curve control by the Fed. And as it relates to private markets, deficits historically have reduced national savings. Historically, has shrunk the pool of funds available for private sector investments. And over time, less investments lead to lower productivity and slower wage growth. And that also impacts the widening of the wealth gap. I think this is a big issue for our country, as this wealth gap just keeps on widening, and our economic output would eventually slow down. You could have inflows of foreign capital to help, but that won't solve the root cause of this problem or the problem itself. So while it's not an immediate concern, it is something that policymakers should be focusing on, ways to reduce the federal debt. It should be a priority. But let's face it, because every president wants a Fed with a loose money policy, meaning that they want spending in order to spur up the economy, to make them look good so they can get reelected and everything else around their political career. And eventually, we're going to hit a tipping point. Either we have outgrown the debt, probably not likely, or it impacts the dollar's ability to remain the world's default currency. And so yes, you should be worried about the national debt, but there's no solution in sight. And if you would like to know what you should be doing from a positioning standpoint for your portfolios, please visit our website and reach out to us to see what we're doing for our clients. Thank you.